please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, then keep an eye out on the markets. It's a Friday afternoon. In fact, we've got 90 minutes to go in terms of the remaining trading time. Well, we're on your stocks. We'll try to answer a couple of queries. But first up, I think we have some information coming in on Manappuram Finance. The board will meet, remember, on 23rd to discuss investment proposals. We here at CNBC TV18 in March itself last year, we told you that the promoter is looking to sell a stake. Abhishek joins us with all those details. Abhishek, you warned us then. Tell us what more you picked up.
Well, Nigel, Manappuram has given a press release stating that they will hold a board meeting on 23rd January to consider an investment proposal. Now, the point is that their capital adequacy ratio is already at 28.7%. So what is the need for this to come in? So we had broken, as you mentioned, last year in March, that the promoter is looking to cash out his stake in Manappuram. And recently, if you check, the promoter has been buying Manappuram's shares from the open market. Currently, as of December, promoter and his associates holds about 34.7% stake in the company. Now, what does this mean for banks and NBFCs? For banks, if they have to buy out Manappuram, the acquisition of gold loans actually have zero risk-weight assets, so it doesn't impact their capital adequacy ratio, while also some of the Manappuram's loans classify under priority sector lending targets, so that augurs well in terms of meeting your PSL requirements. Many NBFCs have now been doing the round in terms of consolidation and in connection with Manappuram especially. So NBFCs are richly valued and that can act as a currency for them to go ahead with this transaction. Back to you.
All right, Abhishek, thanks very much for that. Let's focus on some earnings reactions that have come through. PC Jewellers has announced good numbers. There's been a big improvement in terms of margins, which are now past the 10% mark. As well, the profit is up about 7%, but it's the operational improvement this year which bodes well as well. The GST rate on diamonds and precious stones have been cut to about 0.25% from 3%. So it's a double positive for a jewellery company like PC Jewellers. Sanjeev Bhatia, the CFO, now joins in. Mr. Bhatia, good afternoon, sir. I'll come to the GST part in a bit. First, let's focus on your numbers. Good-looking numbers. Congratulations. Are these margins sustainable?
We are pretty confident that going forward also, we should be able to sustain these margins because the Q4 is also a wedding season quarter. So, and the diamond jewelry sale is also good in this quarter also as per our past record. So, going forward also, I am very confident that we will be able to retain these margins and there doesn't seem to be any downside as on date.
Okay, great. You're sounding quite confident there. No downside to the margins as on date. Mr. Bhatia, I wanted to ask you a quick question in terms of diamonds. How much of your revenues came in from there? I believe that's a higher margin business, so that's what could have helped your margins, isn't it?
Yeah, this quarter we did nearly 31% of our jewelry mix was in the type of diamond jewelry.
So that's what's helping your margins, isn't it? Are you looking at maintaining it at 1%, or do you believe there's scope to increase it in terms of the total pie?
No, I think 31 to 32% would be going forward. We should be somewhere between these two figures only.
Okay. So now with the GST...
overall, we have been given guidance that between 30 to 32%.
Okay. So now with the GST rate reduction on diamonds and precious stones, would you, how would it help you? Would you see some working capital requirements ease? What would be the exact benefit?
So number one point to look at from a macro viewpoint is that the government is taking this sector or this industry very favorably. This is point number one. And because this sector is providing a lot of employment, lot of taxes, lot of duties. So this is the main macro level impression which we get first. Number two, if we come to the specific impact on working capital, obviously your working capital blockage gets less because in the case of diamonds, the working capital cycle is much longer than gold. So whatever you save, this means ultimately GST is something which you recover from the consumers. But in any case, your blockage of capital gets less and quite substantially less. So this is a very positive movement for us.
All right, Mr. Bhatia, let's get a couple of more details going from you. What are the total number of stores you have currently? I believe the last count we have is roughly around what, 75 to 80 stores, if I remember right. And if you could help us out with what was the SSG for the past quarter?
Yeah, so our store count is actually 84 as on date.
Okay.
And this quarter SSG, and this quarter our SSG has been more than 20%. So actually that has contributed a huge lot to this growth also.
All right, and if you could give us some guidance on both number of stores.
That's also helped in margins.
Okay, number of stores that you will add, and what should be the sustainable SSG growth rate we can look at?
So going forward, regarding number of stores, we are aiming to cross the 100 store mark by this year end. That we are working hard on the same, and that remains. Regarding SSG, I feel a more sustainable level of SSG should be something between 15 to 16%.
Okay, all right, Mr. Bhatia, you're sounding quite confident. The numbers as well look quite good. So all the best for the remainder of this year, and in fact, all the best for FY19 as well.
On Your Stocks, today we have the lady special edition of Your Stocks, where we answer all the queries that have been sent in by the women investors. Joining in today are two experts, Ashu Madan and Prakash Gaba, who will be answering all the queries which are coming in. So good afternoon, gentlemen, to both of you. First up, Sujita Gupta writes to us from Gujarat. He says that he holds 250 shares in HDFC Bank and wants to know the future of this stock from a long-term perspective. So, Ashu, this stock is, this query is headed your way. What's the take, especially post the numbers? In any case, I think no hiccup was expected. Ashu, can you hear us?
Yeah, can hear you. Can you hear me?
Yeah, yes. Ashu, the query is on HDFC Bank.
Yeah, I heard that.
Go ahead.
So I'm saying that HDFC Bank has, in the recent quarters, have also shown the stable growth. So besides this, the company has robust asset quality. So it could be a slow mover, but I certainly say one should hold this stock. If somebody has to be in the banking, I mean, there is no shortcut to HDFC Bank. So I mean, on dips or probably somebody can add. So it is a must-have in any portfolio. So I mean, leaving aside some price plus minus, I'm sure that one should. We are convinced about the market. So one should continue to hold HDFC Bank. It's a no-brainer, I would say that.
All right, Ashu, just a minute. Just hold on to that thought. By the way, we are getting the same-store sales growth for Jubilant Foodworks, and boy, doesn't it look good. It's coming at around 17 to around 18%. We were working with a number of around 10 to around 11%. So clearly, pizza seems to be, the theme in the last quarter. So Mangalam's with us. Mangalam, you want to chip in there? Time for a treat.
Time for a treat? No, I mean, the pizza seems to be the flavor. 17.8%. I have the data from, FY13. I think the second quarter FY13 was when the company had posted 19.8%. Thereafter, it's not touched 17.8%. And that is why you see the stock moving higher. I'm also looking at other data points. The total number of restaurants that they've added in this quarter is just 3. We were working with a number of 10. That means the company is consolidating its operations. And once you add less restaurants, people order more from the same restaurants itself. They've improved their product quality. They've repriced those pizzas. And in Maharashtra, the pizza stores, the Domino's pizza stores are open till midnight as well. So you can get your pizza deliveries. I think all those things together have aided a 17.8% same-store sales growth. Any way you cut it, these are very good numbers.
You know, Mangalam, in May 2017, you could have bought a large cheese burst for around 820 rupees, the large one, cheese burst. If you didn't buy the cheese burst and you bought the share, you would get 2 cheese bursts now. You get some garlic bread, and also you will get it till 3 a.m. in the morning.
Till 3 a.m. in the morning, and with the everyday value that they've come out with in those 2,000 rupees, not only will you get 2 cheese bursts, you will get 2 cheese burst pizzas free as well. So that's 4 of us. There is Prakash in the studio, Sumaira and Nigel, all of us getting a lot of pizzas. But just a view on the EPS as well. This time the company's posted an EPS of 10 rupees this quarter. consensus on the street is working for next year's EPS of 31. If this 10 rupees continues, that means next year they do an EPS of 40 rupees, which is still 25% higher than consensus. And mind you, brokerages are very bullish on Jubilant Food. So it's not like it's undiscovered or something. During the quarter, Philip Cap, one of the earlier bears, also upgraded the stock to buy. Deutsche Bank reiterated to buy. You had Morgan Stanley top pick with a target price of 2,400 rupees. So it is not that it isn't discovered or anything of that sort, but the company, after being discovered, after the massive run-up that you spoke about, 800 to about 1,900, 2,000 as we speak, after that, if the company posts such sort of performance, then, I mean, I don't know what to say.
Yeah. All right, so good going. The stock sitting at a new high, 2,000 rupees on that one. We'll take a quick break, come back and focus on answering some more queries in a bit. Stay tuned.
Just moving to the high point of the day. Take a look at that stock. It's up 5% now and is just screaming away, moving to the high point of the day as we speak. Well, we have Geeta Chaudhary, who writes to us from Kolkata. She holds around 500 shares of ITC at 350 bucks. Long-term investor wants to know whether or not to hold or to sell. Oopsie. Unfortunately, Geeta has bought it, Prakash, at the recent high, actually. What should she do?
Thanks, she called, because I bought ITC for myself in my personal portfolio for long term now. So she can add it. A, hold it, B, add it. I think it's bottomed out ITC technically. It's a matter of time it's going up higher. So this is the place to buy and hold.
Cap index now in the green and a couple of stocks actually in focus. NIIT Tech reported a stable set of numbers over there, but the stock is now heading higher, so up about 4-5% on that one. And the other one to watch this afternoon now is Jubilant Food. Nearly 18% in terms of same-store sales growth, a big shot in the arm for that one. So Jubilant Food now up about 5-odd%. We'll wrap up then on your stocks, but do remember to keep sending us your stock queries. Post it on the Money Control message board. Do stay tuned. Closing bell comes up